Welcome everyone to the introduction of taxation area. So this is going to be the first chapter of your BL7 business taxation part. In this discussion we are going to cover the fundamental areas in order to understand and further comprehend the business taxation area. So the contents of this video presentation is going to be the intended learning outcomes recommended by the Curriculum 2020 of the Institute of Chartered Accountants of Sri Lanka, and the major concepts that are important to understand the fundamentals of taxation. After that, we are going to understand the definition or meaning of tax. What is tax? The function of taxation. Functions mean how the system of taxation contributes or impacts on the social and economic context of the country. The principles of taxation is the next part. Principles mean the features for a good tax system. What are the essential characteristics a good tax system should have? Those are covered under the principles of taxation. The difference between direct and indirect tax. Here we have to understand what's the meaning of direct tax and what the meaning of indirect tax is, and the major differences between direct and indirect taxes, inclusive of the examples of each categories. Then the taxing authorities in Sri Lanka. There are different taxes and different authorities responsible for charging the tax. So we have to understand who are the major taxing authorities in Sri Lanka, as well as the major categories of direct and indirect taxes imposed presently in Sri Lanka. If we have understood the area 7 and 8, then we have to match which taxes coming under which authority. So we will be having a blended learning of the taxing authorities with the taxes applied, and thereafter it will be the revision session. So this is going to be the contents of this video presentation. Let's move into the next area. The intended learning outcomes recommended by the Curriculum 2020 of the Institute of Chartered Accountants of Sri Lanka. So the first part, today we are starting Introduction to Taxation, the very basic fundamentals. In 1.1 heading, Functions and Principles of Taxation, Learning Outcome 1.1.1, state the economic and social functions of taxation. As already we have discussed, functions mean the impact or contributions of the tax system. Here we are going to study about three different functions of the taxation. Under that, two main areas are economic functions of taxation. What are the economic impacts and contributions of taxation? As well as social functions of taxation. What are the social consequences or contributions of the taxation system? Learning outcome 1.1.2, state the principles of taxation and the differences between direct and indirect taxes. So this covers two areas. The principles of taxation. What are the good characteristics a good tax system should have, and the direct and indirect tax differences. So these learning outcomes will be the base for your exam questions. Hence you must be clear in these learning outcomes at the end of this chapter. Topic number 1.2, tax system in Sri Lanka covers 1.2.1, state the role of tax authorities in Sri Lanka. If we take Sri Lankan example, there are different taxing authorities like Department of Inland Revenue, Provincial Departments of Revenue, Department of Customs, and Excise Department. These are some of the major taxing authorities. So we have to understand what their role is, which tax they are responsible to charge, and what are the implications of them. Learning outcome 1.2.2, identify the major taxes in Sri Lanka. Income tax and value added tax, nation building tax, economic services charge, stamp duty, excise duty, and taxes on imports. These are some of the examples of major taxes in Sri Lanka. These may be falling under either direct tax or indirect tax, and we also have to study who are the responsible charging authorities for each and every kind of tax mentioned herewith. So this is the main area that you are expected to develop your knowledge and prepare your exams under this section A, Introduction to Taxation. So in order to understand this introduction to taxation, there are some major concepts you will be getting familiar, and you must have a broad knowledge. So first, tax. What is tax? Normally, as you might have heard, in many situations tax is something that we have to pay to the government, and at different situations different people have to pay this. So tax is a payment to the government. For the moment this is enough, we will study further. The direct and indirect tax. Direct, if the tax is charged directly from a person or an organization, that is direct tax. If the tax cannot be charged directly but charged through indirect routes, then it is called indirect tax. The collecting authority or charging authority, as we have already seen different authorities, there are different legal authorities or statutory bodies which are responsible for the collection of different taxes. So we will be studying. So the meaning of collecting authority is the body, the statutory body which is responsible for the collection of a particular tax. Taxpayer is the person or organization who is supposed, who is obliged, who has the responsibility to pay the tax. Economic burden of tax means when a person has to pay the tax, they have an economic obligation. It's a burden on them. So the economic burden means their obligation to pay the tax. Functions of taxation means the impact or the implications, the contribution, the consequences of tax. Principles of taxation, the good characteristics of a tax system. So in order to understand further, let's move. What is tax? As already we have discussed, tax is a payment to the government. Every people at different circumstances have to pay. So accordingly we will understand tax is a payment, but a compulsory payment or contribution made by the citizen of a country to the government for the benefit of the country. So every one of us, knowingly or unknowingly, paying the tax to the government directly or indirectly. But we must understand that this tax is a payment that we are paying to the government. If we pay with a burden, it is called a payment. If we pay voluntarily, it becomes a contribution. Anyhow, we are giving a contribution to the country for the benefit of the country, because the government is getting the tax from us and spending back to the country. Therefore, it is a compulsory payment or contribution made by the citizen of a country to the government for the benefit of the country. And the government collects the tax. Not only tax, there are different kinds of government revenue. The government collects revenue in the forms of taxes, charges, levies, fines, etc. So if we see the examples of taxes, you might have known about income tax, value added tax, nation building tax. So see, these are some of the examples of tax revenue of the government. Apart from the tax revenue, there are some charges. For example, if you want to renew your passport or you are applying for a new passport, you have to pay a certain fee to the immigration department. On the other hand, if you are applying for a driving license, you have to pay a charge to the motor traffic department. So these are some of the charges we are paying to the government. And levies. Levies are some of the other categories of payment government charges. For example, business levies. If you want to renew a business license, you have to pay a levy. Fines. If you have made a legal wrong, then you will be fined. The penalty, it is paid to the government, and it's a sort of government revenue. So we have to understand the government gets different types of revenue, and tax is one of the revenues. Here we are going to talk about the taxes only, mainly. The taxes are imposed as direct and indirect taxes. So the direct taxes, as already we have seen, directly charged from a person or an organization. If that cannot be directly charged but through some other measures, it can be the indirect tax. A direct tax is levied directly on a person or corporate income, whereas indirect tax is levied on the price of a good or a service. So if we see the example, for example, if the government is charging a tax on my income, I have to pay it. So it is a tax directly imposed on me, then it becomes a direct tax. So the direct tax is normally charged on the income or a profit of an organization. That is the feature of a direct tax. But indirect tax is not on the income or profit but on the goods. For example, if I have a certain quantity of goods and the government imposes a tax on that, but I am not ready to pay the tax, so I will sell the goods to another person and I will charge the price and tax from that person, and I will pay to the government. So I am paying the tax but not from my money, I am charging from somebody else. So the tax burden is shifted to somebody else. So it's not a direct tax on me. Therefore, indirect taxes are charged on goods or services price. So these are some of the basics of taxation to understand what is tax and some of the features of these tax. Moving forward, functions of taxation. Function means the consequences and contributions of tax. Here we are going to learn about three different functions of taxation. In those three different functions, the first function is that the primary function. Why taxation? Right? So the question why taxation is answered here. Raising funds for public expenditure is the primary function of taxation. So this is the first function. Primary function is funding the public expenditure. So here we have to understand what is public expenditure. The expenditure made to the public by the government. In other words, the government expenditure. The government spends a lot for the infrastructure development, national defense, national health care, education. So for all these expenditure, the public gets the benefit, but government spends. In order to make that expenditure, government needs some sort of income. So, tax is one of the primary sources of income, and this is the primary function of taxation. Raising funds for the public expenditure is the primary function of taxation. So, this is the first function, and moving to the second function called social function and economic functions. So, first we will study about the economic functions. Set local and foreign investment direction. If we want to increase the investment, we have to give some tax deductions. Wherever the tax deduction is given, investment will be increased. If the government, on the other hand, plans to reduce the investment, they will increase the tax. When the taxes increase, the investors will divest. So, local and foreign investment can be directed to be increased or decreased, and the taxation can be used as a tool for that. And the second economic function is protect local industries from foreign competition. There are some foreign competitive goods are imported. When foreign goods are imported, the local manufactured good get lower demand. Therefore, if the government want to promote the local industries, they will charge high tax on the imported items. Then the local industries will be protected. So these are two economic functions. And moving to the third function, that is the social functions. How the taxation system contributes to the society. Discourage activities undesirable by the society. In our society, we don't like some of the activities like cigarettes, alcohol. So the government will increase the tax on those kinds of products. These are called demerit goods. These products will be charged with higher tax. Therefore, the price will increase, the consumption will be lesser. Encourage activities desirable by the society. Whatever essentially needed by the society, the government will reduce the tax. For example, medical services, education, healthcare. On these areas, the tax is very much lesser. Therefore, many people will get the advantage of lower price. So, the encouragement of desirable activities. And the third function in the social functions, reduce income disparity between rich and the poor. The government will impose tax on the rich, and the government will give subsidies to the poor. So, when the people earning higher level of income will have to pay higher taxes, their income level little reduces. And those taxes will be considered as the subsidies to the poor, so their income level will be increased. So, the income disparity will be reduced between these two categories. So, here in the functions of taxation, we have learned three different functions. Primary functions, economic functions, and social function. There is one primary function, two economic functions, and three social functions. You have to remember, because this can be simply tested as a direct question in your exams. Moving forward, the principles of taxation. Repeating again, the principles of taxation means the characteristics a good taxation system should have. So the first principle is equity. Equity means the fairness. The taxation system should be fair enough. The taxpayer should feel, yes, this is a fair, good tax system. How they can feel this is, the highest income earners should pay higher taxes, lowest income earners should pay lower taxes. Then the people will feel, yes, this is a fair taxation system. This system has a good effect. So that is the meaning of equity principle. Certainty principle. The taxation system should be certain. It cannot be confusing. It cannot be ever changing. There should be a stability in the system of taxation. Then only people will be able to understand the taxation system easily. Convenience and voluntary compliance. The taxation should be convenient to the people to understand, calculate, and pay. For example, if a person want to calculate his tax, he should be able to calculate on its own. He should be able to pay it whenever he is convenient. So the installment payment should be introduced. And the voluntary compliance means people themselves should pay the tax rather than government demanding to pay. If the government starting to demand to pay, the collection expenditure will be increased. But if the people think this is our contribution to the country, then the collection cost will be lesser and everyone will be paying with honesty. So that is another good principle. Economy means lesser cost. So the government is getting a revenue through taxation, but the government has to pay a collection fee. The collection fee should be reduced. Then it will be the economy. Progressivity. The progressivity means when the income level increases, the tax rate also should increase. So the higher income earners will pay higher taxes, lower income earners will be paying lower taxes. So this is again relating to the equity principle. Progressivity means the rate of tax should increase with the rate of income. Adequacy. The government is getting revenue from tax, but that revenue should be adequate for the government expenditure. So the government should get adequate income from taxation, otherwise the taxation system is not much effective. Broad base. The government should have different bases, different areas to charge the tax. That means there should be different taxes. If the government has only one tax and charges high, people will feel dissatisfied. But if the government has different taxes and charge a little bit in every area, then the government can get adequate income and the people will not feel the burden of tax. And finally, simplicity. The taxation system should be very much simple to understand. The taxation should be simple to understand and calculate. And one more principle we have to study is the efficiency in taxation. Efficiency means the outcome, the revenue should be high, but the collection cost should be lower. This is again relating to the economy principle, but this is another principle of taxation. So you must understand the meaning of each and every principle mentioned herewith. Moving further to study about the first principle, equity. In equity we have seen there should be a fairness in the taxation system. So mentioning the equity, there are different categories of equity. The equity principle means higher earning people should pay higher amount and the lower earning people should pay lower amount. So this include two types of equity principle. Benefit. Whoever gets the higher benefit should pay higher tax. That means whoever gets the higher income should pay higher taxes. Second one is ability to pay. Whoever has the highest ability to pay should pay the highest taxes. Whoever have the lowest ability to pay should pay the lower taxes. So this is benefit equity and ability to pay equity, two kinds of equity. Further dividing the ability to pay, there are two kinds of equity. One is horizontal equity. That means people whoever have the same level of income should pay the same level of tax. People with same level of income should pay the same level of tax. That is horizontal equity. And the other equity is vertical equity. People with different levels of income should pay the different levels of tax. So this is the other side of the horizontal. Horizontal says same level of income, same level of tax. Vertical says different level of income, different levels of tax. So this is what I mentioned by the equity principle. Moving forward, direct and indirect taxes. Indirect tax is not charged on a specific person directly. So, indirect tax is collected by a person other than the person on whom the tax is imposed. For example, if I am a seller and I have been imposed an indirect tax, VAT, I am not going to pay the VAT. I will sell the product, I will get the tax from my customer and I will pay. So, I will be only doing the part of collection. I am not going to pay, but I am going to collect from my customer and pay. So that is the indirect tax. Tax burden can be shifted. If the government is imposing VAT on me, I will shift it on my customer. My customer will shift it to his buyer. So final burden is on the consumer. Lower collection cost, because here the people on whom the tax is imposed will be the collection agent. So the government has lower collection problem, lower collection cost. Therefore the collection cost is low because the people are involved in the collection. have a regressive impact. So when the tax burden is passed over and over, the final tax burden will be very much high. So the ultimate consumer, the final consumer, will have a highest economic burden of tax, that is called have regressive impact. Example, value added tax and nation building tax. These taxes are imposed on the prices of goods and services at the point of sales. On the other hand, if we think about the direct taxes, this is totally against the indirect tax. Direct taxes should be paid by the taxpayer directly to the government. So here they cannot be the collecting agents. They cannot wait to shift the burden to another one. They have to pay it directly. Tax burden cannot be shifted because the tax is directly charged on a person. Collection cost is high unless there is a voluntary compliance. If the taxpayers willingly paying the tax, the collection cost is lower. If they are not willingly paying, the government has to file the action against the taxpayer to charge that. Then there will be time delays, administrative costs as well as legal costs. So the collection cost will be higher at this instance. Generally progressive, when the income levels increases, the tax rates also increase. That is called a progressive effect of tax. This is applicable to the direct tax. And the examples are income tax charged on individuals as well as income tax on companies, that is called corporate taxes. And also economic services charge, ESC, also is a direct tax. We will study about these taxes in detail in the upcoming modules. Taxing authorities in Sri Lanka, we have already seen the examples. The same examples we are going to see again. The Department of Inland Revenue, this is one single department in Sri Lanka which is responsible for many number of taxes in Sri Lanka. This is coming under the central government, and this Department of Inland Revenue have different branches in different regions, but this is a single department. They are collecting the major taxes in Sri Lanka. So we will see what are the taxes there. The provincial departments of revenue. If we see in Sri Lanka, there are 9 provinces. Every province have their own department of revenue. So altogether there are 9 provincial department of revenue. These revenue departments get the income for their provincial council within their provincial authorities. So there are some taxes can be charged by the provincial department. So that is an income to the provincial councils. The Department of Customs, the Customs Department is located at the entry point of the country. That means wherever the international trade goods are coming inside the country, that is imports, or going outside the country, the point of import and export, this Customs Department is located. Very specifically we can say the Customs Department is located at the harbour and the airport, where the goods are sent out, export, or the goods are received, the imports. At that point the Customs charges the tax. So the Customs Department is responsible for taxing on the international traded goods. But in Sri Lanka we don't have taxes on exports. Therefore, we are not going to cover the export taxes, but we have taxes on imports. So, the main function of Department of Taxation is charging import taxes. And Department of Excise, this is a very special department which is responsible to collect the taxes on alcoholic products and tobacco. So, these are the primary taxing authorities in Sri Lanka. And we are going to see the major taxes in Sri Lanka. Income tax. Income tax is a direct tax, as we have already seen, levied on income of every person. Here the person means maybe an individual or a corporate entity like a company. So income tax is the first example. Second, value added tax is the main indirect tax levied to final consumers of products and services. So the value added tax is charged on the goods and services, therefore it's an indirect tax. Nation building tax again is an indirect tax similar to VAT but with some differences. Economic services charge is a direct tax levied on business turnover. So turnover means the business income of every person or a partnership. Import duties on the imported goods, so that is again an indirect tax. Import duties are levied at various rates of importation of goods to the country. Stamp duty. Stamp duty is charged on every specified instrument executed, drawn or presented in Sri Lanka or executed outside Sri Lanka, being an instrument which relates to the property situated in Sri Lanka at the time of such instrument was presented in Sri Lanka at the rate specified by the minister by order published in the Gazette. Simply we have to understand the stamp duty is imposed on the legal documents. For example, if you are getting a lease, there should be a legal agreement. If you are getting a lease of a land, there should be a lease agreement. If you are going for a rent agreement, or if you are selling or buying an immovable property, there will be legal agreements. On these legal agreements, that is mentioned as specified instrument, it can be created or executed in Sri Lanka, or presented in Sri Lanka, or it is drawn outside Sri Lanka but related to a property located in Sri Lanka, then it is a Sri Lankan specified instrument. Then the stamp duty will be applicable. We will study about this stamp duty further in a separate appendix. Share transaction levy is both the seller and buyer of the share on the same transaction when shares are transferred through CSE. When you are buying or selling shares in the share market, there's a levy should be paid, that is called share transaction levy. So these are some of the major taxes in Sri Lanka. As already we have seen about the excise department, the excise duties are charged by the excise department on the liquor and tobacco products. So these are the major taxes in Sri Lanka. Already we have studied about the major taxing authorities in Sri Lanka as well as major categories of taxes in Sri Lanka. Now we have to study about the relationship between these taxes and charging authorities. So here we are going to talk about the 4 different charging authorities we have studied and the different taxes we have studied. So the first is Department of Inland Revenue. The organization head of Department of Inland Revenue, that is the highest authoritative position of the Department of Inland Revenue, is the Commissioner General of Inland Revenue. And this Department of Inland Revenue is responsible to charge the income tax, value added tax, nation building tax, economic services charge, stamp duty and share transaction levy. So these are the taxes charged by the Department of Inland Revenue. Moving to the next body, Provincial Revenue Department. There are 9 provinces in Sri Lanka and every province have their own revenue department. The head of this revenue department is called Provincial Revenue Commissioner, and this department collects the stamp duty. So here we have to understand Department of Inland Revenue also collects the stamp duty, Provincial Department also collects the stamp duty. So there's a separate category or instruction or guideline which stamp duty comes under the Department of Inland Revenue, which stamp duty comes under the Provincial Department. This will be studied further when you are learning about the stamp duty. At the moment we are not going to cover that area because this is just an introduction only. Moving to the next department, Excise Department. The head of the organization is called Excise Commissioner and they are charging the excise duty on the liquor and tobacco. Moving to the next, Customs Department, which is located in the harbour and the airports where international trade is happening. The head of the organization is called Director General of Customs and they are charging mainly the taxes related to the imports, that is called imports duty. There's no export duty in Sri Lanka at the moment, so import duty, and they are charging another levy called a Port and Airport Development Levy. VAT on the imported goods. When the goods are imported, there should be a VAT charge, but this is on the international trading goods. The Customs Department will charge the VAT and they will further transfer the VAT to the Department of Inland Revenue rate. Nation building tax on imports, the same procedure. Special commodity levy. There are some special goods charged with special taxes. For example, on the gold, on the gems traded, for the international trade, there will be a special levy. This will be charged by the Customs Department. Excise special provisions, excise duty. When the liquor and tobacco products are internationally traded, the Customs Department will collect the excise duty and transfer to the Excise Department. Cess on behalf of other government institute. If there are any other charges to be charged by any government departments at the internationally traded goods, the Customs Department will charge and transfer to the relevant department. If we take an example, there's an importation of motor vehicle, the Motor Traffic Department will have some charges. So the imported motor vehicle will be charged with that cess by the Customs Department, and later it will be transferred to that certain government institution, that is the Motor Traffic Department. So this is how the Sri Lankan tax system is working. So if you are clear on this area, it is the time to revise your study text and handouts with this video presentation. And if you have any further questions, you can anytime contact us through any of the communication media that is already communicated to you. So with that, we are ending up with this introduction session. and the revision question will be uploaded for further discussion in our virtual classroom. So please be connected in the virtual classroom. We will meet again in another session. Thank you.